Hi everybody, thanks for joining us today on this episode of Emily Now. We're going to be talking about creative mortgage and loan requests, the best interest rate, what that even means, example of some frustrated clients, and because of the week that it is, we're going to be talking about tax time. So thanks for joining us. Hey everybody, I'm Dylan Gallagher, founder of mlenow.ca. I'm a finance guy who for the past 18 years has been helping people and businesses get the money they need. I've been working with investors to help them find good deals. And this is a podcast and videocast on all things finance with a focus on debt, because I believe that the more you know, the better the decisions that you can make, and the better decisions sort of lead to three outcomes, which are being able to save money for the future, invest in opportunities, and then or be in a position to give your money away to the local community around you. And so I'd encourage you to visit mlenow.ca to see for yourself what options you might have if you need a mortgage or loan. mlenow.ca is an online platform making it easier for borrowers that need money from banks and lenders. And if you have any questions, follow us on Twitter at @MLNowCanada, or like us on Facebook. Post whatever you want to know about mortgages, loans, banks, etc. And in upcoming episodes, I'll look to make sure that we've answered those for you. And our goal, of course, is we want to help you do more. So to start off the episode, as we normally would, I'm going to address a couple of questions that I've seen come up here in the past week that I think might be helpful. And so here we go. Question number one. How creative do you need to be when talking with a bank or lender about your mortgage or loan? This is interesting because we actually had a client that came through mlenow.ca. They were interested in getting a mortgage on an investment property, and they actually used the words, I don't think you guys are being creative enough in how you're showing my deal to the bank. And so I thought that'd be an interesting topic to discuss a little bit, because getting money isn't really about being creative. Maybe in the past that might have been the case. Today, it's not about being creative. It's really about math. Banks, lenders, they're heavily regulated. They're under lots of pressure from the government and the economy and the sources from where they get their money. And so being creative is a bit of a misnomer. Your math has to work. You really got to be able to afford the financing, whether you're an individual or you're a business. And so how creative do you have to be? Well, I might suggest don't be creative at all. Make sure that you lay out what it is you're looking for. Make sure that the math works, and you'll probably find that working with banks or lenders to get the money you need is going to be a lot easier. The second question. This is a massively popular question, and it's, what is the best interest rate available right now? You know, I've never really found a great way to answer this question for anybody because, man, interest rates are tough. On the one hand, interest rates for your mortgage are based on the rate that the bank sets, but then you get mortgage specialists and brokers or agents that are able to use their commission to buy the interest rate down. So a real live example would be, say you get quoted, I don't know, today, 2.99% on a 5-year closed. Well, a bank or a broker or anyone who's working with you to help you get your mortgage, they could use their commission to buy that down to 2.89 or 2.79. And so what's the best rate available? Well, it's kind of whatever a broker or a specialist wants to buy it down to. But then the second thing is that there's different products and offers that banks will have. And so a popular one is the 30-day close, which is if your deal is going to fund in the next 30 days, that the banks are prepared to give you a bit of a better deal because you're going to commit to working with them pretty quickly. And so because of that, they're willing to give you a better deal. And that's called a quick close. So oftentimes what happens, someone will be driving down the road and they'll say, oh, look, I can get 2.69% on a 5-year close. My broker said he could only get me 2.99%. And so then they pick up the phone and you try to work through the reasons, and the reasons are pretty varied. So what's the best interest rate available right now? Well, take a guess in the marketplace by going to the various websites that are out there. There's some great websites that post what the best rates are today. And then, of course, it's important to keep in mind that just because you're getting the best rate doesn't always mean you're getting the best mortgage as it relates to things like paying down your mortgage. Some banks only allow you to pay down 15% every year, but they give you a really great rate versus other banks that say we'll let you pay down 25%, but maybe their rate is a little bit higher. So as is true in life, everything is a trade-off, including what the best interest rate is. When you talk about commercial mortgages and business loans, it's even a little bit more sketchy because it's even less simple. Banks make a profit margin off of the amount of money that they charge you, and based on kind of what the bond market is doing. And so some banks will say, well, if we're going to fund a manufacturing client, we're going to add 2% to our posted interest rate because that's a manufacturing client. Or if they're in the business of, if it's a hospitality business, maybe a particular bank says, look, this is our 5-year rate, but because you're in the restaurant business, we want to add a few percentage points. So the question of what is the best rate available right now is really a difficult question to get a great answer on, but there are things that you can do. Figure out what you think you can approve for based on your own math, and again, you can use mlenow.ca to figure that out. But as you talk with brokers and bankers or whomever you're interacting with, try to understand what the variables are that are going to affect the interest rate. I know for myself, sitting with a client in the past few weeks, we sat with the banker and we kind of went back and forth on right in front of the senior banker that was going to be making the credit submission. And they asked, the client was asking very specifically, why am I getting charged this rate? How do I get it lower? And and the bank was able to the banker was able to walk this particular business owner through what the moving parts were. So you got to do a little bit of homework. You've got to do a little bit of research, but make sure that you are clear on what the criteria is for being able to get that best rate. This week we had kind of 2 transactions back to back that as we were talking here in the office, I thought, wow, isn't it funny how this business works? And we had one client that came in and they're looking to purchase an investment property, and they own a couple of properties already. They're pretty much maxed out on the amount of money that they're able to use towards servicing a mortgage payment based on what the bank says. Their credit score was average. I mean, it was I think it was probably less than 700. But good job, stability, their credit report's pretty clean, but they're right on the edge of what they could afford, but we were able to get them an approval. And the exact opposite end of the spectrum, we have a client buying a principal residence. Him and his wife make a ton of money, tons of investments, but the nature of his income is last year and probably in the decade before, he's been an employee. And at the end of last year, he decided to become a consultant, but he doesn't quite have his consulting contract sorted out yet. And so the bank said, well, we know you make hundreds of thousands of dollars a year, but because we can't figure out and kind of get our head around how you earn that income, because you don't have a contract, you're not on someone's payroll, your last 2 years of tax returns don't show you're self-employed, so we don't really know how to sort out how much money you make for purposes of figuring out the mortgage that you're looking for. And so, man, we've been going back and forth on this file for weeks already. And so in the first case, we had a client that was just on the edge, but because they could sort of show they had some job history, and notwithstanding their income was maxed and they're rate kind of on the border of what they can afford, bank said, no problem, we'll go ahead and we'll fund you because you sort of fit inside the box. And yet we have this other client that has a net worth that's 3 times the amount of the mortgage they're asking for. Between him and his spouse, they generate $500,000 a year in annual income, but because the bank can't prove it in the little box that the bank looks to prove it in, the bank just said, we're going to have to figure out a different way to do this deal. So I share that because sometimes people don't really understand that it might feel like bankers don't live in the real world when you hear an example like that. And it's important to know that when you're dealing with a bank or a broker, you're trying to get the mortgage or loan, that you are educated on what the options are. At mlenow.ca, we've worked really hard to try and lay out for you the basic criteria that you're going to need to meet. But then as you get past that, and you're now looking to work with someone that's actually going to interact with the bank on your behalf, there's just these tiny little details that can make pretty big differences in your ability to get approved. And in this particular case, this one individual didn't really realize the impact that not having a contract would have, firstly, and then secondly, that his income isn't verifiable because of the nature of how he earns it. So made an offer on a property, waived conditions because of his financial net worth, and then is now getting to the point where he realized that maybe him and his wife needed to do a little bit more homework or understanding of what was going to be required before getting that mortgage. But in both cases, we're able to get the client what they were looking for, but it wasn't without some pain and some angst. So there's an example. There's a couple questions that we thought we'd have this week. How creative do you need to be when talking to the bank? Hopefully not creative at all. And what's the best interest rate that's available right now? And my answer is, well, it depends on who you talk to. But make sure you talk to a few different people or do your own research so that you understand what makes up the best interest rate in the marketplace. And then walked you through an example of just sort of two different scenarios where someone who's kind of on the thin edge of the wedge was able to get approved, and somebody who had lots of income and lots of net worth but kind of didn't meet exactly the criteria that the bank looks for when they approve a mortgage. Just to be aware that there are these things that can present challenges when you go to borrow money. So when we come back, I'm going to give a little update here on kind of what we see happening in the market right now and what my comments are on that. Okay, welcome back. So if you're in Canada, you would know that tax time is coming to an end. April 30th, everyone's taxes are due, signed, sent off to the government, and get ready to start making your tax payments. For us, working in this business, we know that self-employed individuals who own a business, take dividends from their company, etc., they usually take this time of year to kind of understand, okay, how am I going to pay my tax bill? Do I refinance my house? Do I maybe renew my mortgage early to try and maybe free up some capital, or how do I exactly take care of the tax bill? I think it's important that business owners in particular sit down and do some tax planning with their accountant to determine what the best way to take care of taxes are. I know for myself, man, every year it feels like I'm having a new conversation with my accountant about, okay, so how do I take in income? How do I split it with my wife? How do we do we take dividend income? What's the value of being on payroll through the company? What's the implication of GST? I mean, it just always seems like there's so many things to know, but I think it is important that you do a little bit of tax planning with your accountant to understand, how am I taking the income in? How am I going to pay my tax bill? As it relates to borrowing, many people don't know that dividend income, so you own a company, your company has some profit, you pay out a dividend, that banks don't recognize dividend income as what's called earned income. And so for tax planning purposes, your accountant's going to say, take a dividend, take a dividend, take a dividend, because that's probably the most tax efficient way to get money into your personal hands from your business. But if you're looking to borrow money, banks typically won't consider dividend income off the cuff. There's a little bit of work that you're going to have to do in order to prove to them that the dividend income is income that can be relied upon for making mortgage payments. The way we've seen that happen is we've typically said to a borrower that owns a business, show us your financial statements for a couple of years. Let's look at the retained earnings that are sitting on the balance sheet to try and understand, has this company been profitable has your company been profitable for the last couple of years? And if your company's been profitable for the last couple of years by way of the retained earnings showing no losses or no negative entries, then that means that the money coming out of the company probably could be sustained into the future as well. And in a lot of cases, I've seen banks ask for 2-3 years worth of financial statements to sort of show the track record. And if you're listening to what I just said and you're thinking, well, what the heck are retained earnings? open up your financial statements or get your accountant to open up your financial statements. You're going to look at the balance sheet, you're going to have assets, you're going to have liabilities, and then right below liabilities, you're going to have something called, hopefully, something called retained earnings. And that's really an accumulation of your profit and loss statement over the years. And so if the balance is positive, then I think life's probably okay for you. If the balance is negative, then that means your business has probably experienced some cash flow problems or some profitability problems, and a bank's really not going to look at that. So with tax time coming up, April 30th, make sure you get your taxes in. And if you see a big tax bill coming up, or you're talking with your accountant doing some tax planning and need to access either the equity in your business or the equity in your home, I would encourage you to visit mlenow.ca, where you can kind of sort out how you're going to do that. You can kind of see the list of the banks in the marketplace. Your information will get a score, and then you can take that score and match it against banks. It should be able to help you. So anyway, that's it for Emily Now this week. We look forward to seeing you again next week, and in the meantime, visit mlenow.ca and get prepared to be approved.